Welcome back to Investing Talk podcast. Today we're looking into an upcoming earnings report for a real giant in casual dining, Darden Restaurants. The company behind Olive Garden, Longhorn Steakhouse, household names. Our goal here is pretty simple. Cut through the noise, look at the data, and really highlight what you need to know about Darden's upcoming report. We want you to walk away informed. We'll break down what analysts are expecting, take a look at their past performance, and pinpoint those key things that could actually move the stock. And hey, before we jump in, if you're finding these discussions valuable, please think about subscribing, maybe hitting that like button, or leaving us a comment. We genuinely love hearing from you. If there's a company you want us to look into next time, just drop it in the comments. Oh, and if you're feeling particularly supportive, you could even buy us a coffee. It definitely helps keep these conversations going. Okay, let's unpack Darden Restaurants then. The big event is their fiscal Q1 2026 report. When exactly is that coming out, and what are the analysts thinking?
Right, so the date to circle on your calendar looks like September 18th, 2025. It's a Thursday, and it'll be before the market opens. What's interesting is how firm that date seems. Options data providers, Darden's own notices, they all point to the 18th. So pretty reliable. Now, expectations. Zacks is reporting an analyst consensus for EPS that's earnings per share of $1.98. And that $1.98 reflects a pretty healthy expected increase year over year, about 13.1%.
13% growth. Wow. That's quite solid for a company their size. What about revenue? Is there a consensus figure for that?
Yeah, that's a good question. Zacks doesn't explicitly give a consensus revenue number for this specific quarter, Q1 26. But looking at recent quarters, Darden's been hovering around, say, $3.3 billion in revenue per quarter. And importantly, that includes contributions from some recent acquisitions they made.
Okay, so solid EPS growth expected. But, sometimes there are those whisper numbers floating around, or maybe Darden gave some more specific guidance themselves for this quarter, anything like that.
Not really for Q1 FY26 specifically.
Yeah.
No public whisper number from the major data sources, not that we could find anyway. Darden last gave their full-year outlook for fiscal 2026, back when they released their Q4 results for fiscal 25. At that time, they sounded pretty confident, talking about their winning strategy, highlighting the integration of Chewy's Tex-Mex, which they bought recently.
Ah, the Choosies deal. Right.
Exactly. They're really emphasizing operational focus and getting growth from those acquisitions. Less about giving super specific quarterly numbers way in advance.
Yeah.
Just for context, though, their Q4 adjusted EPS was $2.98, and that actually beat the expectations at the time.
So they do have a bit of a track record of beating expectations, even if just slightly.
That's right. It raises an interesting point about consistency, doesn't it?
Mm-hmm.
Darden has a pretty reliable history here. If you look at the last 4 quarters, they've generally posted these modest positive surprises. Like that Q4 example, $2.98 versus a $2.96 consensus. It's small, like a 0.68% beat, but it's consistently in that positive direction. And Zacks' aggregate data shows the same thing, this trend of small beats. They seem very good at managing expectations and avoiding those big negative earnings misses. It suggests stable, predictable performance.
Stable and predictable. That sounds good for certain types of investors. But what does that mean for the stock price reaction after the report comes out? Does it tend to just sit there, or are there still moves?
Well, that's the interesting part. If you look at the historical data, say from Market Chameleon, which tracks this stuff, Darden's post-earnings stock moves are usually quite muted, relatively speaking anyway. It's rare for the stock to jump or drop more than, say, plus or minus 5% on the day after earnings.
Only 5%. That's pretty contained for an earnings event.
It is. In the last 2 quarters, the stock actually reacted positively, but the moves were smaller than what the options market seemed to be pricing in. And speaking of the options market, the implied move for this upcoming report is around plus or minus 4.5%.
Ah, so right in line with that history.
Exactly. It lines up really well with their typical 3 to 5% moves. So the market isn't expecting fireworks based on past behavior.
Okay, beyond the pure numbers then, what else has been going on with Darden during this past quarter that might influence things? Any big news, acquisitions, trends?
Definitely. The biggest thing was probably completing that acquisition of Chewy Tex-Mex. That added 103 restaurants to their portfolio. That's a significant move, and they've cited it as a contributor to sales growth going forward. We'll be watching how that integration is going.
Makes sense. Anything else?
Yes. A couple of other things that signal confidence to investors. They announced a new $1 billion share repurchase program, and they also increased their dividend. Both those moves tend to be shareholder-friendly and suggest management feels good about the future cash flow.
Buybacks and dividends, always nice signals.
Right. And the CEO, Rick Cardenas, he keeps reiterating their focus on that winning strategy and solid operations. It paints a picture of steady execution.
And what about the bigger picture? The restaurant industry itself, the economy. How does that play into Darden's situation?
Good question. The overall restaurant sector, especially full-service dining, where Darden mostly plays, has actually been pretty resilient. We've seen restaurants implementing menu price increases, often above inflation. And consumers, well, they've largely continued to spend on dining out.
Even with inflation concerns.
Even with those concerns, yes. Now, pressures like labor costs and food inflation are starting to moderate a bit, but there's still definitely factors the industry is watching closely. Darden, though, seems to have navigated these risks quite well compared to many of its peers.
And the broader economy, consumer spending holding up.
From a macro perspective, consumer discretionary spending is held up surprisingly well, although there are some signals of a potential slowdown maybe starting. But Darden's brands, like Olive Garden and Longhorn, they benefit from having a strong value perception within their segments. That helps when consumers get a bit more price conscious.
That value positioning is key. So bringing it back to Darden specifically, how are the individual brands actually doing? You mentioned Olive Garden and Longhorn are core.
Yeah, let's look at the Q4 FY25 numbers again, because they give us a good baseline. Consolidated same-restaurant sales growth for Darden overall was plus 4.6%. Pretty solid.
Okay.
But breaking it down, Olive Garden was the real star, up a huge 6.9%. That's impressive for such a mature brand.
Wow, 6.9% for Olive Garden.
Right. Longhorn Steakhouse was also very strong, up 6.7%. Their fine dining segment, though, was actually down slightly, minus 3.3%. And the other businesses category was up 1.2%.
So it really is Olive Garden and Longhorn carrying the weight.
They absolutely are the main engines, and that strength flowed through to the bottom line, too. Adjusted diluted EPS was up 12.5% year over year in Q4. It lines up with what analysts are generally saying, too, mostly maintaining a kind of modest positive rating, pointing to that solid execution and the successful integration work as reasons for sustainable growth.
Okay, that 6.9% at Olive Garden is just sticking with me. How sustainable is that kind of growth, realistically? And what does it tell us about diners right now?
That's the million-dollar question, isn't it? I mean, it tells us the value proposition is hitting the mark, especially when people feel a bit squeezed economically. They see Olive Garden as offering a lot for the money. It also says Darden's operations within Olive Garden service consistency are working really well.
But can they keep doing almost 7% growth?
Sustaining that specific level, 6.9% quarter after quarter for a giant brand like Olive Garden, that's tough, very tough. So what we'll be watching for is if they can maintain strong, positive growth. Maybe not 6.9%, but still comfortably positive. That would still be a win.
Got it. So let's think about the upcoming report. What would a really bullish outcome look like? What gets investors excited?
Okay, a really bullish report would mean, first off, they continue nailing that brilliant with the basics strategy, just excellent operations across the board. Second, you'd want to see really positive initial signs from the Choose integration. Strong sales contribution, maybe hints that cost savings, those synergies, are coming through faster than expected. And critically, continued resilience in same-restaurant sales, especially at Olive Garden and Longhorn. If demand stays strong there and maybe costs are managed well, you could definitely see another beat on both revenue and EPS.
Makes sense. And the flip side, what are the potential risks? What could lead to a negative surprise?
The biggest risk is probably any sign that traffic is weakening, especially like we just discussed at Olive Garden, given how high expectations are after that huge Q4 number. A significant slowdown there would definitely worry people.
Right, the comps get tougher.
Exactly. Then you have the macro factors. If consumer spending really does slow down more sharply, or if there's an unexpected spike in food or labor costs that hits margins, that could cause a miss. And of course, the Chewy's integration. If it turns out to be more expensive or difficult than planned, or if the brand itself underperforms early on, that could drag down results too.
Okay, lots to watch there. But if you had to pick one thing, the single most important metric for our listeners to focus on when that report drops, what would it be?
For Darden, it really comes down to same-restaurant sales growth at those core brands, specifically Olive Garden and Longhorn Steakhouse. Why? Because they are the profit engines for the whole company.
Right.
Historically, when those two brands outperform on same-store sales, Darden tends to beat overall sales and EPS expectations.
So keep your eyes glued to the Olive Garden and Longhorn comp numbers.
That's the key indicator, absolutely. If they're strong, the overall report is likely to be pretty good. If they stumble, especially after Q4, that's your red flag.
Okay, so putting this all together, based on the history, the trends, the potential risks, What's your overall feeling heading into this report? Bullish, bearish, somewhere in between?
I'd lean neutral to bullish, maybe a 7 out of 10 on the confidence scale towards the bullish side.
Yeah.
The reasoning is Darden's track record. It's predictable, they execute well, management seems strong, the recent beats provide momentum.
Okay, a cautious optimism then.
Exactly. Cautious because, as we discussed, the stock doesn't usually make huge moves after earnings, and there are always those broader sector uncertainties. What if consumer spending does hit a wall? So, solid company, likely solid report, but maybe not a stock set to explode higher immediately after.
That makes a lot of sense. So, for listeners who might be thinking about trading around this event, what does Darden's profile suggest in terms of strategy?
Well, given that history of implied volatility from options often being higher than the actual stock move.
Meaning the options market expects a bigger move than usually happens.
Precisely. So some traders might look at strategies designed to profit from low volatility, things like an iron condor or maybe a short straddle. These bets essentially pay off if the stock doesn't move dramatically, staying within a defined range.
Interesting. Betting on stability rather than a big swing.
It can fit Darden's profile. Now, if you do want to make a directional bet, maybe slightly bullish, strategy like a call spread could make sense, or just owning the stock. But I'd only really advise that if the broader economic data and sector trends look supportive right before the report date, because the main risk really feels like it's to the downside if those same-store sales disappoint significantly.
And position sizing is key, I imagine.
Absolutely crucial. Darden rarely makes massive outsized moves unless something really big hits the whole sector. So discipline is required. Don't bet the farm expecting a huge earnings pop.
Great insights. So wrapping up then, Darden Restaurants report expected September 18th before the bell. Analysts are looking for solid EPS growth, building on a history of modest beats and consistent execution. Key things to watch are that True's integration and, most importantly, same restaurant sales at Olive Garden and Longhorn. And that brings us to a final thought for you, our listeners, to maybe mull over. When you look at Darden's strategy balancing acquisitions like Choose with things like share buybacks and dividend hikes, alongside that core operational focus, what element do you think will be most crucial for their long-term success and stability, especially as consumer habits keep shifting and the economy throws curveballs? Is it the expansion, the shareholder returns, or just nailing those basics day in, day out? Something to think about. Thank you so much for joining us on Investing Talk podcast today. We really hope this look into Darden's upcoming earnings helps you stay informed. We'll catch you next time.